Welcome back to Stock Talk Trades. We're going to be covering the top 3 bullish patterns and how to trade them and when to look for them. You really only need one pattern or one strategy that you use, and you can be profitable. That you can make it a full-time career. A lot of traders really mistake. They jump from strategy to strategy to strategy. So we're just going to cover 3 today. We're going to cover the bull flag, the falling wedge, and the double bottom. So stick around, consider subscribing. Let's jump right into it. Let's first start off with the bull flag. The bull flag is a continuation pattern that the buyers are still in control, but they're taking some profits. The sellers, the short sellers, aren't really jumping in yet. So we want to see increasing volume, validating the price higher with other candles. On the bull flag pullback, we have a nice parallel channel with decreasing volume. This is indicating this is not validating the move lower. The volume is decreasing, indicating that the sellers who bought down here, or the buyers who bought down here, are now selling, but traders aren't jumping in to short sell it even lower. And to get confirmation out of this bull flag, this is already an 80-20 setup. But if you want to get even more confirmation, you want to wait to have increasing in volume outside the break of this trend. And let's say you can nail the entry right off this, and a lot of the times it will pull back to a support level, retest, and you could have it. Let's say you enter right here on a small pullback, you see a doji candle. You can have your low right below it, somewhere right here. And again, I like to, personally, how I trade, I like taking profits right when it breaks the previous high. Not all of my profits, obviously. Then I have my other price targets that I will scale out of this. And then once it breaks this bull flag, I will move my stop to break even. So again, and as it comes up, if we get a successful retest of this previous support level, then I will move my stop below this support level. And then let's say we break above this support level, I will bring my stop above there, and so forth. Now let's go ahead and look at a real world example. This is from ZEV from yesterday, and we can see we have a nice move with increasing volume. Then we have a nice doji candle. This is indicating that we could have another small pullback, or it could be the top of a major reversal. In this case, it was a small pullback. We have decreasing volume with the actual pullback, which is to be expected. Since we have a trend in the upwards direction, if we want this trend to continue, we want high volume. We want this trend to not see. Now, if you just look at these candles, you'd be like, oh, we're in a downtrend. But since we have decreasing volume as well, we can see that it is actually not validating the price action. So therefore, it's just not something that we want to actually get into. Now, what we can actually look for is a nice reversal. We have a doji candle, decreasing volume. There's a good sign. We're testing the markets. You could have bought in. Your stops would be below here. Take profits, above, and then as it continues to run, once it breaks, we have increasing volume. There's the first validation. Then we have even more. But here's where it gets a little tricky. After we break, I would definitely take in profits, because see how we have increase in volume, but this spread is not much bigger. This spread is not much bigger, but there's our first sign. Then we have decreasing volume along wick. So again, this is just not the price action and the volume aren't really matching, but we do have increasing volume. So all we really need is increasing volume for the first trend, decreasing volume on the pullback, and then another increasing volume to validate the trend. And let's go ahead and take a look back. And again, it pulls up, and we were talking about how that volume doesn't really match the price action. So it just kind of dumped off. But you were still able to capitalize on this. If you're able to get in around 8-7, that's still 5% right there. And you would scale out. You'd scale out at $9. That's a natural resistance level. And then you would scale out how you would like to, moving your stop up frequently. Now let's go ahead and look at the falling wedge. Now the falling wedge is another 80-20 setup, but the volume doesn't matter as much here as it does with the bull flag. And all of these patterns works on all time frames. It just will be relative to how long these take to play out. And we have the falling wedge, bouncing back and forth in between 2 trend lines, kind of wedging it down and forcing it to kind of pop up. I really don't like this market structure, trading inside of the falling wedge in here. The volume doesn't really matter as much. You want to see it kind of maybe have decreasing volume, maybe with a little spike of volume, maybe at the bottom, for some a nice doji candle, maybe a nice spike. It doesn't matter what color it is. Maybe you'll catch and move to the bottom once it gets close to the point. Then what really matters for volume is the actual breakout. Once it breaks out and you see validation with volume, that traders are looking to bring this higher. Let's say you're able to get in, let's say maybe we have a doji candle or inverted hammer here. So you buy in, let's say you get a bad entry somewhere right here. If the doji's pretty low, you know, I would have my stop below this previous low. So this doji's, I drew that doji a little bit too long, but let's, for the sake of this video, we're gonna do it below this doji and below this trend line. So your first price target would be this previous high. Take some profits there, take half off the table, move your stop to break even. Once, if it comes back and tests this level and continues higher, support below it. Then let's say it breaks this level. Again, move your support higher, take maybe a quarter off. Then you continue going, you can play this out. Now let's look at a real world example. Now let's look at ZEV. This is also from yesterday. There's the bull flag that we looked at. Now we're looking at the nice flag. This could also be known as the ABC pattern, but the ABC pattern didn't really plan out since we did get the double top here. But now we're just focusing on this falling wedge. Now, you can either connect it to the wicks or the bodies, whatever works best and whatever looks the best. That comes with experience. The falling wedge can also come in from the downside. So it doesn't really matter where it's entering from. We're just looking at this section. We're not worried about what this is. So as we're coming down, you know, we have a little bit of increasing in volume, you know, but we do have a smaller spread for these two candles. Consider this one. There's a first sign that we could be reversing here. Also, that we might be coming to the end. Then we have, you know, small volume, big spread, and we have even increasing in volume, but we have a small spread indicating and wick, so we don't know where it's going. Then we have a nice shooting star candle testing the buyers, seeing if there's money sellers. Then we have a doji candle increasing volume. This is where you could have bought in. You would risk less than 1%, but you have the percent. You could have gained 4%. Again, your first price target, mine would have been around 850. That's around 20 cents away. And then these, as it continues higher, our first sign that we would be kind of losing steam would be that this doji candle has increasing volume, but it has a low spread. So that's how you trade a falling wedge. Now let's go ahead and look at the double bottom. Let's talk about the double bottom. And the volume doesn't really matter too much in this pattern because it's just a matter of what the traders are looking to do. In a normal downtrend, you know, we have a rundown, a pullback, maybe a nice lower low, and it just kind of keeps going lower. With the double bottom, what we see is that the sellers are now starting to lose steam and are now being matched by buyers. So let's say we make a low, we make that retracement, and then now the sellers are starting to step in, but they're starting to lose steam because now the people who bought up here are also taking or sold up here are taking their profits down lower, and they can't break this previous key level, and then we can see a nice double bottom reversal. Really, for this to be validated and be an 80-20 setup, we want to see this low be lower than this low. But, you know, if this comes down, maybe breaks, kind of cracks it and continues higher, that can happen, but I wouldn't take the trade personally just because it's not an 80-20 setup. And if you can validate this, maybe with this is a bull flag, if it works out, or it's a pennant, or if it's an ABC pattern, you can work that out. Or if you have a strategy built around this, that's pretty much all the strategy now, or all that you need to know about the double bottom. Now let's go ahead and look at a real world example. Here we're looking at AMD with a nice double bottom. We can see that we have the sellers bring it down, they're matched with buyers, and the buyers take over for a little bit, and then the sellers gain control once again. And then again, once we reach this key level of support around 74, we can see that buyers, this is a very strong demand zone, and buyers like to take control of this, and we absolutely rip and run over the next few days, all the way up to $85, $86. And, you know, have a small pullback as we do. Here's another double bottom, 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 and then we continue to run. Double bottoms are amazing trades, and they're amazing to use in your trading, intraday trading, swing trading, because they allow you to find out when actual downtrends could actually reverse. And then, you know, also with the double top, everything applies to the double top as well for the reversal from the uptrend. Thank you guys so much for watching. If you're still here, let's, you know, tap that subscribe button, tap that like button. I'm trying to hit 1,000 subscribers by the end of the year, and I know we can do it. Thank you guys so much. Love y'all. Peace.